Hello, fellow traders. 'Tis I, the Rumpled One. It's Monday, April 15th, tax day. The year's 2019. Let's talk trading. Horizontal lines, Wick zone. I had a couple people, couple traders, viewers said do Wick zone next, even though Holo zone preceded the Wick zone. I don't want to disappoint traders, so we'll do Wick zone. We can save Holo for next week. Anyway, when you're trading the Wick zones, as when you're trading any other method, whether it's one of the ones I show you or somebody else shows you, money and risk management comes first. It's that simple. And just to finish out the week, the weekly chart here, you can see all gaps have filled. There was one gap when I posted the video last night. And there was, I think it was the euro dollar hadn't filled yet. So you had your chance, even though it was only one pair, to get that fill. And if you didn't, that's on you. Can't blame me. But we're talking about Wick zones. Okay, what is a Wick zone? A Wick zone is the area that's between the previous candle's high and the top of the candle, and between the bottom of the candle and the low. We call that a zone. Now, the thing that I noticed about the Wick zones is once price enters the Wick zone, it doesn't like staying in the Wick zone. You see right here, price entered the Wick zone from below and it popped out above, and now it's back, it's settled back in the Wick zone. And you know, the euro yen could turn me into a, not a liar, but it could prove me wrong. Right now we're sitting at a range. Oh, there we go. 30 pip range. Usually the range is greater than 30. So that's just something to note. Okay, back to Wick zones. Price doesn't like staying in the Wick zone. So you can see here we had it open, entered the Wick zone, exited, entered the Wick zone, and exited. You see here, price entered the Wick zone, exited, came back in, exited. Price does not like staying in the Wick zones. Now, that's just me telling you, but, you know, I don't want you to believe me. We'll use statistics to prove it. So this is my price travel analyzer. Those of you who have the 2017 donationals got the price travel analyzer. And what that does is it allows you to analyze price movement. So let's look at this bottom one. Price never left the Wick zone. Okay, we're doing the lower Wick zone. Never left the lower Wick zone. Looking at the past 100 bars, so it opened less than the previous bottom 33% of the time. It opened greater than the previous low 26% of the time. Okay. High less than previous bottom one time. Low greater than previous low one time. So what it's saying is that the price never left the Wick zone 38% of the time. So 62% of the time, price left the Wick zone. So that puts the odds in your favor. You got 2 out of 3 chance, just about, that price will leave the Wick zone. Okay, and that's just over the last 100 bars, but we can change that. And let's see what happened over the last. Okay, where is it? My bars. Let's look at the last 1,000 days and see if that radically changes it. Okay, so now we're down to 59%. Still, odds are in your favor. And that's just the lower Wick zone. So once again, we look at the chart. We can see here, this is the upper Wick zone, but we looked at the lower. So here's a lower Wick zone. Price entered it, it left it. Here's a lower Wick zone. Price entered it, and it left it. Here's a lower wick zone. Price started out in it. No, actually above it. And you see here it stayed in it. It closed within that lower wick zone, but it didn't look like it left it. So since we're using the daily, we can only go by the open, high, low, and close. But it's possible price came into the wick zone, went back up, and came back down. But you'd have to get into lower time frames to analyze it. But for our purposes of looking at whether or not this is a profitable trading method, you can see here you've got what 59% of the time, 58% of the time, still not bad odds. Vegas would love to have odds that high. So, and you can look back here, you can see when price enters the wick zone, what happens. It usually moves out of the wick zone, so you can take profit. And even today, you can see here it moved out, what, a couple of pips maybe. Okay, we'll see. The high 76, today's high 78. Like I said, a couple of pips. Some people would call that a false breakout, but once again, you crossed the line, you broke out. Of course, some wicks are bigger than others. You can see that here. But price still seems to go in the wick zones and come right back out. We've got statistics on our side. Now, how does that really help us? Now, let's see. Let's look at some other charts. Once again, you see we've got the top wicks. I still got the rat dots on there. I wonder, let's see. That's just the simple rat dots. I think these are just rat dots. Yeah. We can just turn those off. But you can see the size of the wicks. Once again, this helped us out in the rat zone, but also in the wick zone, you can see the size of the wicks. Just looking at that, you can see that wick versus that wick, how price moved outside the wick. So, of course, the smaller the wick, probably the higher the probability price will move outside it. But you can see here we've got some pretty big wicks. Now, will price come out the bottom? It's possible. Will price come out the top? It's possible. And we know those statistics. And here, just looking at the dashboard with the wick, you can see it says it's inside the upper wick zone. This is cross above the bottom wick, bottom of the candle, cross above the high. So the X means cross, A is above, B is below. And then we've got bottom, high, top, and low. And once again, looking at the range here, we're still same day. But you can even look here on the hourly chart. You can look at these wicks and you can see you can use the wicks as a trade even down on the hourly. Now, price is just ranging here. It's not ranging much, but you can see here we had a bull candle, price came in, and price came out. And see, we had no wick on this candle right here. But here, once again, price opened, went into the wick, and then it came out of the wick zone. So one of the things you can use the wick zones for is when do I exit? Let's say you went long here, and you held the trade, and you can see here, price is just going, entered that wick zone. Now here, it didn't exit on the top. So if it doesn't exit on the top side, it exits on the bottom side. If it doesn't exit on the bottom side, then it's going to exit on the top side. And the thing is, once you establish a wick zone, you can use that wick zone for as long as you like. So you can say, well, right here, there was a high. So you can place that horizontal line right there and say, okay, does it close above the line or is it closing below it? Is it crossing above or crossing below? And you can see if you just use that one line, how many trades. You could have had a long trade trigger here, a short trade, a long trade, a short trade. Just saying, did price cross above it? So right here, you made a new high, so you can move the line up and say, okay, there's that upper wick zone now, but we made a lower high, so price crossed below it. Then you come here, price came and crossed above that, crossed above the high, but here it didn't close above it. Here it crossed above, crossed below, came back down. So if you were long, it's saying, hey, let's take the profit. Let's lock in the profit. And if you're waiting for a trade, it's like, hey, it's time to go short. So that's just using the wicks. So when people talk about price action, they make it sound like it's some esoteric thing that it's going to take you forever to learn and master. Well, you can just learn it, in a few minutes. You just study it. Price gets in the area of the wick, then it either exits to the upside, exits to the downside, or stays within. There's no other options. It's not that difficult. But, some traders out there who usually have something to sell want to make it seem like they've got the inside track and the secret on this when they really don't. Now, once again, using statistics, we've got low minus previous low, and we're with the daily filter red, and then high minus previous high with the daily filter green. Okay, so today it went in and it's, we know it went up 2 pips. Well, that's greater than 0. So 67% of the time, high minus previous high is going to be greater than 0. 56, it's going to be greater than 10. 20, about 48% of the time. So, and once again, based on the last 1,000 bars. And the last 1,000 bars is basically 4 years worth of data. Really, you probably don't want to go back that far, but you can change, the distribution bars to whatever you want. But I like to do this so the naysayers, I'm using, a lot of data, so they can't say I'm cherry picking, some set of days that makes this look good. No, this is just straight last 1,000 days. And you can see here we've got some pretty huge minimums or pretty huge maximums and minimums, meaning that the high was, I guess we probably had one of those days where it was a big gap down or something. So that's what happens. So once again, looking at these statistics, you can see here, these trades should be worth somewhere between, 0 and 20 pips. You got a high probability. And of course, sometimes you get the runners like right here. You took that breakout, you had a nice 100 pip run. But, don't expect it to happen that often. When it does, it's sweet. But, use some common sense and some money management and, start to peel off part of your profit somewhere here between 10 and 20, depending on how fast price is moving. If price is steadily moving up, well, there's no reason to, cut out. And looking at the price travel analyzer, you can see open inside the lower wick zone. Does it close below the previous low? 26. Low less than previous low, 61% of the time, showing you had, 6 out of 10 chance of making profit. And it only closed 26% of the time. So what's that telling you? That's telling you take your profit while you can, because there's a chance price is going to snap back the other way. So that's it for the first segment here of wick zones. Just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks.